Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, Coindesk Managing Editor of Global Capital Markets, Lawrence Lewitinn, and Managing Director of International Content, Emily Parker. Good morning, you two. I see Bitcoin not moving much this morning.
Nope, not at all.
All right, checking in on Bitcoin. The Coindesk Bitcoin price XVX index is currently trading at $38,808. Bitcoin trading pretty flat, though down slightly, about 0.9%. And the Coindesk Ether price ETX index is at 2388. ETH is down about 2.5% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the Coindesk brand, trusted globally as the leader in crypto news, events, and data. Okay, so, looking at some of our top stories, we had the Fed yesterday. We saw news now that the World Bank is saying that it cannot assist El Salvador in Bitcoin implementation. No surprise there, though.
Yeah, they gave kind of like a hokey reason. They're like, oh, environmental concerns. Like that's ever been a concern of the World Bank. I mean,
right.
Let's be honest.
And you see the IMF looking down and frowning upon the whole situation.
Well, what do you expect? What do you expect? It's like, we talk about, Bitcoin's going to be the revolutionary thing that's going to overthrow the financial system. Yeah. And then everyone's like, why isn't the financial system helping it?
And it plays into the Bitcoin.
The question is, does El Salvador even need the World Bank, right? Like, do they need the World Bank to implement this? That part to me is a little bit unclear.
Yeah, we'll see about that. But it plays into the whole, Bitcoiner narrative that the powers that be don't want developing countries to have their self-sovereignty and to go on the path of discovering the benefits of digital currencies. But
or Bitcoin's supposed to destroy banks, not destroy banks, but replace banks. So.
Or the alternative, and probably the most logical explanation, is nobody knows what to do. I mean, that could also be the entire explanation. It's like, all right, you want to come to us with this? Sure. What exactly do we do here?
Yeah. Or they don't
we're not going to do it because of environmental issues.
Or they don't want countries to be experimenting with risky currencies. And just as an example, we're seeing Iron Finance's Titan token falling to near zero in a DeFi panic sell. It went from $65 to zero Wednesday. The Iron Titanium token, or Titan, is a project attempting to boot a partially collateralized stablecoin known as Iron. The stablecoin in turn consists of Circle and Coinbase's stablecoin USDC, as well as Titan that was pegged to $1. And Titan's price went from 65 again down to 60, and this caused whales to start selling. I mean,
and it's now down to nothing. And that tells, but again, that tells us, wake up and smell the tether. I mean, when you have things backing a stable coin that's not when it's a dollar-based stable coin that's not backed by dollars, there could be a run on it. Especially who knows what if that corporate paper on Tether's books is worth bupkis. So what happens to the price of Tether? What happens to the price of Bitcoin if that happens? That's a big question that's really overhanging the market, and people aren't necessarily talking about it on a day-to-day basis, but it's out there.
Yeah. Well, let's check in with
It's not a good advertisement for DeFi, no matter what. That's basically the bottom line.
All right, so let's check in with our crypto markets guest. The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager. All right, joining us now to discuss the crypto markets is Michele Schneider, taking a look at Bitcoin again. Bitcoin right now trading at just above $38,770, and the ETX Ether price right now at $23.87. ETH again is down about 2.5%. Joining us is Michele Schneider, Managing Director at MarketGauge Group in New Mexico. Welcome to the show, Michele.
Hi.
Just a big picture, maybe you can comment on this whole DeFi predicament that this project finds itself in. It's not the first time we've seen a DeFi project completely deflate, and that's not good for the overall look of the crypto markets.
Well, it's basically like saying that if you were long copper and steel, why were you so surprised if gold did not necessarily follow in kind? So I think what might start to develop as cryptocurrency gets more and more popular is that there will be maybe at some point some kind of ratios that give you some kind of information, but at the very least, there will be these newer coins that emerge that will do well, like Dogecoin, which is still hanging tough, and then others like Titan that you get one panic selling and it goes to zero. And I know Mark Cuban in particular has been very vocal about that because he got hit, or so he says. So that's why we like to stick to the market cap parameters, in which case we know Bitcoin is still the king of, with Ethereum in a second place, not nearly as close as it is to Bitcoin. And so that's where I think the lesson is not necessarily, oh, let's be afraid now of trading any DeFi or any of the currencies, but more like stick to the ones that have some, even some volatility is good, but have some liquidity, have some interest, have some real solid news about it, and also have historical price pattern that you can actually look at and trade off of.
I mean, the historical pattern is really important here in terms of Bitcoin and Ethereum, which we know have stood the test of time. Also, Michele, I wanted to get your reaction to the Fed announcement yesterday and your thoughts on keeping rates near zero, but also potential for a rate hike earlier than expected, and how that interacts with the crypto markets.
Well, I found myself saying at the end of the day yesterday, after listening to the Fed shenanigans, and we'll get back into the particulars in a moment, watching the dollar fly because of the dollar swap program that the Fed had actually employed during the pandemic to try to get people to reduce debt through dollar buying, which is why the dollar shot up. Watching the metals fall, the market fall, the yields rise, I thought to myself, okay, this feels so manipulated. And what is actually safe right here? Can't buy bonds. I certainly wouldn't count on the dollar continuing to go up. The precious metals got hit. We'll see what happens with them today. And buying the overall equity market near the highs when nobody really knows whether or not these rates will go higher, what's happening with inflation, is it transitory? All of a sudden, Bitcoin looked safe, which was so interesting. And we can get back to that. But I really felt like all of a sudden, I understand why Bitcoin even exists. Because of exactly what I was listening to you guys talk about in the beginning of the show, the decentralization of it. So now let's get back to the Fed. The fact that the Fed all of a sudden is recognizing inflation, my joke was that there were 13 of them that said that by 2023, they're going to have a couple of interest rate hikes because of this inflation. I thought, gee, they must have actually finally gone to the supermarket because, we've been talking about inflation for like a year already. And so people are blaming the Fed for the inflation. They're only part of the problem with all the money supply and all the accommodative stance. But essentially, Powell is the focus here. And what Powell tried to do was walk back a little bit after the meeting and said, listen, what's going to happen in Jackson Hole and what we talk about there will really be the policy set for next year. Number one. Number two is yields are actually falling today, and even though this dollar's stronger. And number three is in terms of the bond buying, instead of trying to guess what the Fed might do, and eventually, let's face it, eventually rates will have to go up, is watch these junk bonds, because that's been what I call the Fed's folly. And that's really been actually very much supported. And even yesterday, after we saw the initial dump in the equities, all of a sudden everything rallied. I think you've got government and Federal Reserve buying there as well. So I would not take anything that they say too seriously. Even Powell came out and said that the dot plot, take it with a grain of salt. So if you want to put it all together, I don't really think they know what to do right here, and they're just trying to play both sides. Yeah, we're going to control inflation, but don't worry, we're not going to kill the market.
Well, Michele, before they control inflation, they're going to have to maybe perhaps taper their purchases. And remember, they're not just buying federal government bonds; they're also they're in the mortgage market. They're doing all sorts of things. That's going to be part of the reduction in, or at least what little they have left in their toolbox to try and curb inflation. And part of it is that they're also looking where they were a few months ago has changed because of fiscal policy, from Washington. new packages coming out with trillions of dollars of spending. So bring it back to Bitcoin. Is the hawkishness or relative hawkishness of the Federal Reserve now compared to where it was, let's say, a month or two ago, does that ultimately say, hey, you know what, inflation's not going to be a problem, or at least it's not going to be this big thing anymore because the Fed's going to try and rein it in as best as it can? Maybe Bitcoin isn't that safe haven.
Well, right now, that's not what I see. First of all, I think unless the Fed goes crazy raising rates, which they're not going to do, and they're still pretty convinced that inflation is transitory. And of course, they're excluding food and energy as part of that, mostly looking at some of the other big inflation numbers that came out, like the used car market and the car rental market and what's happening with hotels and airlines, et cetera, and the housing market. But, as far as I can see, inflation right now is the big question. And there are people, by the way, who think that we're going to deflation. And maybe in 10 years, 15 years from now, when technology is so efficient, that'll be the case. But I still believe that it's going to be a slow process here over the next 6 months to a year before we really understand what happens with these raw materials and the supply chain disruptions and the low labor force, especially as we're looking at food prices in particular. So bringing that back to Bitcoin, there's two ways to look at it. There's one is, A, it's not so safe because they're going to combat inflation. And that's a real tremendous amount of faith in the Fed. And the other way is there's so much manipulation, and the Fed will only control it to a certain point. They're going to let it run hot because they're convinced it's on the reopening. And actually, with this manipulation in the markets, we're seeing at least Bitcoin has some basis in the fact that it is not necessarily privy to manipulation by federal governments and central banks. It's a safe place to be. And that's the scenario we're watching for. And that gets back to our first point, which is look at price. That's going to tell you everything.
Oh,
oops.
I think
I'm not hearing
Emily.
you. I'm not hearing the show.
Apologies, sorry. Yes, quickly. We haven't had you on the show since this El Salvador announcement, where El Salvador announced that they would be using Bitcoin for legal tender. It didn't seem to move the market in any big significant way. I'm just curious what your perspective is. How important is this for the cryptocurrency market over the long term?
I think it's important. Whether or not I did read today, and I heard you say the announcement that obviously they're not going to get supported by banks and things to help them deal with this situation of going to cryptocurrency. But what it tells me is that some of these countries, especially these Caribbean countries that have really gotten hammered by dollar-denominated instruments and their economies are not doing well, the fact that they want to switch to cryptocurrency gives it some legitimacy. Whether or not they actually pull it off remains to be seen, but if they can get some kind of model going, I think then you might see some other countries follow in kind, particularly within the Caribbean country region. So yeah, I thought it was actually a very brave on his part, number one. And number two is I think it just gives you a glimpse into the future.
But it didn't really move the market, though.
It didn't move the market, but it also prevented it from crashing. And because it looked very vulnerable there, and all of a sudden, particularly Bitcoin found this floor at around 35,000 when that announcement came out. And then, of course, it was really more, Elon Musk is still really one of the major manipulators of Bitcoin, obviously, as we can see. And when he said, well, as soon as they can prove to me it's 50% less damaging to the environment, then I'll go back to selling Tesla and Bitcoin. That's more influence. But I think the El Salvador gave it some level of technical support at that price level of 35. And now that it's trading between 37 and 39, I find that encouraging. Mm-hmm. If it breaks 30, I'm definitely would be nervous about that. But if it gets through 42, I think we'll go to 47 pretty quickly.
It's been testing that 41,000 resistance. But Michele, we got to wrap it there. Thank you for joining us this morning.
Thank you so much.
That was MarketGauge Group Managing Director Michele Schneider. Coming up, checking in on Asia and DeFi, plus Coindesk Global Policy and Regulation Managing Editor Nick Day. Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, June 17th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Coming up, Korean crypto exchanges face more regulations. A blockchain-powered air quality sensor launches in Hong Kong, and NFTs kickstart a K-pop comeback. Now let's get you up to speed from Asia to the world. In the latest revision to proposed new standards for South Korean crypto exchanges, the FSC, or Financial Services Commission in South Korea, has confirmed that those exchanges will not be allowed to list self-published tokens on their platforms. The ruling also includes coins issued by any persons affiliated to the exchange, and in addition to that, staff and executives will be barred from trading on the exchanges.
발행자와 유통자가 같다는 거는 당연히 이해충돌의 문제가 생기니까 그 이해충돌을 방지하는 거라 보시면 돼요. 근데 이게 좀 따로 법을 만들기 위해서 시간이 오래 걸리니까 그냥 그전에 있던 특검법 상에
The FSC says this move is designed to prevent exchanges from manipulating market prices by falsely entering assets into the network. And crypto exchanges are being forced to reapply to conduct business in South Korea under these stricter guidelines by September 24th. Any exchanges that fail to comply will be forced to shut down. Now, some exchanges have been scrambling to get ahead of the game on this quickly changing legislation by self-policing. Huobi Korea is one such exchange who, on Tuesday, told Forecast News that it would be delisting its self-published Huobi token within 2 weeks in order to cooperate with authorities. In Hong Kong, France-based Planet Watch has begun testing air quality sensors that let their owners earn tokens as rewards. Now, these Planet tokens can then be redeemed for environmentally friendly products and services. Validity of the data has been one of the key challenges globally for monitoring air quality, but these sensors record their data using Algorand's blockchain, and that means every piece of data goes towards building a global air quality ledger, which cannot be changed. Once an area has many sensors, targeted recommendations to improve the environment can be made based on that hyper-local data.
You can correlate this data, for example, with traffic data, or even with a pattern, the route pattern of a public transport vehicle. And sometimes you can improve things with very small measures, like changing the route or the schedule of a bus. In other cases, you just see that there is a pattern, and then you can advise the population, for example, to go out with children and elderly people at some hours and stay at home at other times of the day.
Currently, most air quality monitoring around the world is carried out by governments, and Parinello says the biggest challenge ahead is getting them on board, especially in areas where air quality is known to be poor. Crucial to this, he says, is that someone will get the measurement no matter what, so better to just play ball. And taking a look at the markets, Bitcoin was down, dropping a little below $39,300 at 4 p.m. Hong Kong time. And in the top 10 for cryptocurrencies, with red virtually across the board, the other biggest losers were Ethereum, which fell 3.3%, and Uniswap, which lost 2.3%. And finally today, one of K-pop's most prominent idol groups, Brave Girls, are releasing limited edition NFTs just in time for their comeback. Brave Girls have teamed up with one of South Korea's largest crypto exchanges, Upbit, to offer prizes to the first 348 fans who deposit 10,000 Satoshis using Upbit's direct withdrawal function. Now, winners will receive one of 18 Brave Girls illustrations, some of which are more rare than others. The K-pop industry, as you know, is often described as more progressive and experimental. That's closely watched globally. Now it appears to be warming up to NFTs. So who knows, the next concert you go to, when we can do that again, you might be passing on that band tee and picking up an NFT instead. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
All right, back to one of the top stories of the day. Iron Finance's Titan token falling to near zero from Wednesday's high of $65 after a bout of panic selling. Joining us now to discuss the challenges and what this means for DeFi or decentralized finance is Vanessa Grillet, formerly of Consensus and now head of portfolio growth at CoinFund. Welcome to the show, Vanessa.
Thanks for having me.
Great to have you. All right, so this is not a good look for the crypto markets. You know, a lot of government officials have frowned upon cryptocurrencies because of cases like this, where there's a lot of volatility, instability around cryptocurrencies. Of course, not all cryptocurrencies are alike. Bitcoin obviously has a long history. It has its volatility, but we see projects like this come along in DeFi, and it gives a lot of people concern. Tell us a bit about what happened here and the challenges in the DeFi space.
So specifically to Titan and Iron, there was a lot of visibility in this project due to the fact that Mark Cuban invested in it. And, you know, as any market and financial market, DeFi is an aggregation of buyers and sellers. And when that balance is challenged and there's panic selling, the result is that the prices go down, right? And so not very different from other financial markets, only the fact that here in DeFi and decentralized finance, we're very early. We're still experimenting. All these projects are new, are trying to find ways to bring innovative financial solutions. And sometimes in the mechanisms and the token economics of these projects, there's instability that's embedded. And that's a little bit what happened with Iron and Titan, as in this case, when you mint new Iron stablecoins, the demand of Titan increases and drives up the prices. And so I think we're going to see a lot of those experiments continuing to, you know, succeed or fail. But that doesn't mean that it's not something that will stabilize in the future, right? I think we'll see a few of those. Like we've seen in the derivatives markets, you know, when it started. And so I think we need to understand what the issues are. We need to focus on solving them for future projects. And we need to make sure that investors fully understand the risks of the financial instruments that they're getting themselves into, and that there is a risk that everything goes to zero in some of the projects.
Yeah. Good morning, Vanessa. Is this a warning about the nature of stablecoins that aren't necessarily backed by the assets that they are pegged to? For instance, you know, and that was the case in this situation where, you know, they tried to, you can't maintain the peg to $1. Is this a warning for, let's say, Tether, which has only a fraction of its assets in dollars, the rest in commercial paper? And the overall stablecoin market and the overall crypto market, which is so much based on the strength of stablecoins to keep it going.
I agree with you. Stablecoins is one of the backbones of DeFi markets. There are several types of stablecoins, ones that are collateralized and pegged to fiat, others that are totally algorithmic. So you have different types. All stablecoins are not created equal, and all have different functions. You know, pegging to the fiat requires a lot of risk management mechanisms that need to be embedded in the stablecoins. And the more robust they are, the more robust the DeFi infrastructure will be in the future, and something absolutely to watch for.
Good morning. Are there any DeFi projects that you are particularly excited about? It's sort of in contrast to what we just saw.
I mean, we're investors in the space. We are very excited about DeFi, about automated market-making marketplaces. We are excited about lending protocols. We are excited about stablecoins.
Any projects you can name?
Sure. So we're invested in prediction markets, like Upshot, which does prediction markets for NFTs. We're working quite closely with SushiSwap, looking at what they're doing. And so anything regarding the market infrastructure of DeFi is really exciting to us. We're also working with Oracle providers. So think about Chainlink or other projects of the kind that are really creating all the infrastructure that is necessary for the DeFi markets to succeed.
Great. Vanessa, thank you so much for joining us this morning.
Of course.
Right, that was Vanessa Grellet, Head of Portfolio Growth at CoinFund. Time now to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Hello there, Nick. So we have news that Republicans are starting to accept donations in crypto. Tell us a bit about that.
Yeah, so this is based on a report from last night, but it seems that the National Republican Congressional Committee will accept donations using BitPay. So while donors can send crypto, the NRCC will actually be receiving US dollars through BitPay's conversion. BitPay is a service that just converts crypto to fiat for businesses. It's been pretty widely used, and it seems the NRCC is going to be the latest customer here.
Was this to make Cynthia Lummis happy?
I have no word on that. I guess it's worth pointing out that this is specifically for the House of Representatives, so Senator Lummis would not be involved anyway.
Yeah.
But it is worth pointing out that the NRCC is chaired by Representative Tom Emmer out of Minnesota. Rep. Emmer has been the one of the leading voices on crypto adoption in Congress for quite a while now.
So the VanEck,
go ahead.
The VanEck ETF. What's going on with that? Is it we had some news coming out on there?
Yeah. So this is it was, I think, a purely procedural move. But basically, what happened is the SEC published an order yesterday announcing they were, quote, instituting proceedings to determine whether to approve or disapprove, and this is basically what happens every time. It's part of the process. The SEC, when it gets an ETF application, it can take up to 240 days, but each of those, there are set time limits on how long it can take to do certain things. So, it has a public comment period, it has a response to the comment period, and the SEC, initially announced this earlier this year and, gave people time to comment, and then it came up on a deadline yesterday where it had to either say yes, no, or extend, and that's what happened. This happens again, every ETF application we've seen regarding Bitcoin, the SEC has taken as much time as it possibly can before it makes a decision. So this kind of just feels like, more of that.
Nick, did anything come out of the Biden-Putin meeting that is relevant for the crypto industry?
So from the press conferences both world leaders gave yesterday, it sounds like cyber attacks were discussed, but it doesn't seem like anything specific to crypto was mentioned. But of course, cyber attacks, usually references ransomware, in these days. It goes beyond ransomware, of course, but ransomware is kind of the top of mind topic. I have to imagine that, anything that does occur that pertains to the crypto industry will kind of be, adjacent. It'll be as a result of any efforts made to tamp down on ransomware or to tamp down on other forms of cyber attack.
All right, Nick, thanks for the update.
Thank you.
That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Coming up, Mythical Games CEO John Linden joins us to talk about the virtual gaming world.
The Coindesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
The gaming world is quickly seeing opportunity in blockchain technology. Earlier this month, Mythical Games raised $75 million in a second round of funding that counts Gary Vaynerchuk and Mike Novogratz's Galaxy Digital as investors. Their total treasure chest is now $120 million to build out a platform for game developers to create their own player-owned gaming worlds where players can own in-game playable NFTs. Joining us now to discuss is Mythical Games CEO John Linden in Los Angeles. Welcome, John.
Thank you for having me.
So tell us a bit about how this works. Explain how this changes the gaming world and why would players want more player-owned control?
Yeah, that's a great question. I think the gaming world has been very similar to a lot of the concepts around ownership for a long time, right? We've been dealing with virtual currencies, digital assets, and a lot of the loops around that for ownership. And I think what we're looking at doing in Mythical is we're really looking to bring that back to the players to where they actually now can own and have ability to transfer these assets as they create value within the games. And so that's kind of our focus is really around how do we securely transfer, how do we securely allow kind of marketplace technologies to expose that value to gamers.
Is there a bit of a learning curve for sort of the gaming community to understand how NFTs work or why this is necessary?
Yeah, that's a great question too. We really were focused around trying to avoid some of that. To be real honest, I think NFTs are great. The world of crypto is great, but still the concepts of private keys and transfer and all that can be very, very tricky for, I think, of the average consumer still. And so our goal at Mythical is really to get this technology into the hands of the everyday gamer. We now see 2.7 billion gamers around the world. So what we've done with NFTs and all that is to really try and take that complexity out to where I'm going into a game, I'm playing the game, and I'm just buying it. I'm kind of buying characters like I normally would. I could sell them to somebody else and trade them. And we're kind of taking custodial of that account for the majority of the players behind the scenes. And then we can have additional tools if you're an advanced player to kind of be able to take those on yourself.
So that's interesting. Do you see any evidence that people are kind of your gaming is becoming almost like an entryway into the crypto world for some of these people? Like, they've never had any experience with crypto or NFTs before. And then after using Mythical Games, they kind of are become more interested in crypto.
That's one of our goals for sure. We really think that the concepts of gaming are so just lend themselves to a lot of the concepts of crypto. And I think what we're seeing is the ability that they're going to understand the concepts of, hey, I have this and I leveled it up and I'm going to trade it to somebody else. And then the idea later is like, oh, if I have a private key, now I own these things and they're actually in my wallets and all those kind of more advanced concepts. So we definitely think it's an opportunity to onboard millions of people into the crypto industry over time.
So, John, we had the pandemic is over. Apparently, they're shooting off fireworks in New York, saying everything's back to normal. Allegedly, what does that mean for your business? Is sunlight your biggest enemy? People getting outdoors, does that scare your bottom line?
Not particularly. I think the gaming industry has really been, it's pretty resilient to everything. I think it's great for people to get some sunlight. That's always a great thing for everybody. But I think, I think the virtual worlds are getting bigger and bigger. I think, we're spending more and more time in these worlds for various reasons, right? And I think the games are also becoming more social. So they just become, avenues for not only just playing quests and things like that, but just a social interaction too. So I think gaming is big enough that we can definitely share with the sunshine for sure.
John, people already spend so much time though looking on their screens. Do you foresee a future where most people spend most of their time in these virtual gaming worlds?
I think we've seen the growth for sure, and I think gaming takes on a lot of different facets, right? You can have a lot of social games that are very quick play, versus the big MMO worlds that people do spend hours and hours at a time in. So I think it's really it's gonna be dependent on the exact game itself. But I think what we're trying to do is really bring this concept of ownership back. So whatever the economies are, the players can actually partake within that economy as well. So we think there's a lot of different facets of where this could go.
All right, very cool. John, thanks for joining us.
All right, thank you.
All right, that was Mythical Games CEO John Linden. That's it for First Mover. Thank you, Emily Parker and Lawrence Lewitinn. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.